Hi, this is Darren Long from Delta Harbour Assets. This is the Hard Money Show. Let's talk about what interest rates are going to do. Do they kill the golden goose? Does the stock market drop? We talked about bonds last week. This week, we're going to talk about the long-term approach of gold and silver ownership and what interest rates are going to do to the economy. Let's get going right now.
There are no shortcuts to building wealth today. It takes time, effort, sacrifice, and diversification. But today, diversification means something different than it did in the past. You deserve a more secure way to protect and grow your wealth. At Delta Harbour, we take this to heart. Our mission is to help by inviting you to add physical gold and silver to your wealth strategy. Book a free consultation today and let us show you how to protect and grow your wealth through the ownership of physical gold and silver. Let us show you the Delta difference. Hey, we're back. You are as well. Good to see you. The Hard Money Podcast is upon you again. Here is how you reach out to Darren and the fellas anytime you want to start that investment of precious metals in your portfolio. Like we always say, the best day was yesterday. Second best day is today, right now. So get on it. 1-877-323-GOLD. That is the number. DeltaHarbor.com, Harbor with a U, because this is all about you. It's all about your financial well-being in that part of your portfolio, which should be bolstered for sure. And besides, Canadian company, right? Delta Harbour with you. We always do it that way. Social media, anytime, Instagram, Facebook, Twitter, Apple, Spotify, iHeart, Google Podcasts, all that stuff. Delta Harbour is how you want to search for that one. Darren, busy show today, as always. So there you go. You called it. I think we called it last week. It might have been the week before. But Bank of Canada popped up the rates again, another 75 basis points. So it's over 3 now, well over 3. People starting to panic. And they even said, this is not the last time we're going to do this. Guys, get ready for more. It's going to happen again and again. So what, in your opinion, what effect does this additional rise in rates have on gold and silver? And I mean, the overall economy for that, pal. What do you think?
Well, welcome once again to everybody listening to the show. And it's true, John, two-part question, and I'll deal with the second part first.
Cool.
The economy suffers tremendously. I mean, I think it's common sense for the most part that as interest rates go higher, cost of living rises. So, I mean, obviously, this is not something that, politicians, bankers, countries can deal with for extended periods of time without there being counterbalance, right? Do we have wage growth? Do we have job growth? And I don't mean just, are more kids getting paid instead of $14.30 an hour? Are they getting paid $16 an hour? I mean, do we have career positions that are being developed because we're growing our economy? Are we just focused on service sector like we have been for so long, or are we growing a manufacturing base? These are all questions that in part make up the macro picture. But yes, interest rates are higher. Again, I urge people to understand the complexities of this as much as they can by reading a little bit here and there to understand what the bank is forced to do at this point in order to quell this inflationary concern they have. We all know, and people who've listened to this show, that inflation was a thing for a very long time. We've talked about, stagflation. We've talked about the shrinkflation effect that inflation has on products and how they shrink in size, but you pay the same price. Quality deteriorates. COVID helped a lot to do that, and we're not fully back and engaged yet. Although I will say, kids got back to school this week, and there was an uptick in traffic for sure, which I hated. I was happy to have less traffic. But that being the case, the bank rate swelled another 75 basis points, which is huge. That happened last Wednesday morning. That was aggressive, not completely lethal, but enough to inflict some pain, some real pain, John. This has been a serious tightening effect and effort, raising the central bank rate from 0.25%, which was our ridiculous pandemic level low, to what you just said, which is over 3.3% now, which is at 3.25%. So inflation's still double that, but an increase of around, let's say now 1,200% in the bank rate in a few months really hurts. I mean, let's face it. I mean, I don't even think people have woken up to the fact that their lines are twice what they were just a few months ago in terms of their monthly payments. I mean, that's just money out of your pocket being taken on a month-to-month basis without really you or the rest of the crowds, me included, without there being a serious uptick in our well-being or our incomes or our wage expectations, albeit there's lots of employment out there. But what is the quality of the employment? What is the quality of the income from that employment? The prime rate at charter banks is now 5.45%. And if you have a variable rate mortgage, and we've talked about this ad nausea, get rid of it. You should have been locked in a long time ago.
Agreed.
If you have a HELOC, the home equity line of credit, or a demand business loan, you're feeling it right now. And this is a painful feeling. Those monthly payments will now have more than doubled since their lows year to date. New buyers will be able to finance and afford less when it comes to homes, when it comes to cars, when it comes to credit card borrowing. Folks renewing those 2% mortgages that were great will have more than double the amount now, will be impacted heavily by payments that are now going to be reflective of this change in the way the economy's gone, and interest rates in particular, to quell this inflationary pressure that we have. So the object intent of the Bank of Canada is to discourage borrowing at this point in time, is to slow it down. It's to make credit way more expensive, put the brakes on consumers, and shut down the real estate market. But how do you balance that, right? How do you balance that? What is the bank going to tell the business owners that, hey, listen, Christmas is coming, holiday season's coming, we really don't want you to sell as much? You can't do that. It's a double-edged sword, and the politicians know it. It's not in their favor to raise interest rates in the midst of their tenure, but they're doing it because they are left with no choice. They responded late, they acted slowly, and we're going to suffer because of it, especially the middle class, John, especially
always
middle class. Absolutely. So, and right now, the cost of money, we believe, is going to continue to rise. So as for gold and silver, in the first part of this, how it impacts, many investors and analysts alike believe that since rising interest rates make fixed income investments more attractive, more money will flow into those arenas. And so a lot of people will move to what they call the higher yielding investments, such as, let's say, the money market funds and so forth. And that means that a lot of people will think, okay, well, I'm not going to touch gold and silver with a 10-foot pole. And thank God it's only a small percentage of people that have actually bought physical gold and silver, because the best is yet to come. The highest amount in value for gold and silver is yet to come. It's ahead of us, not behind us. And when you look at gold and silver, I think that is the common sense belief. Let's not touch gold and silver right now. I mean, let's face it, over the last couple of months, summer doldrums, prices down from what they were leading into summer. So central bankers, they move interest rates higher, and it should follow that there is weakness in gold and silver. In the immediate short term, this is about summer doldrums. This is about people leaving the arena, taking a bit of profit off the top. This is not about higher interest rates, because there is little to no evidence, at least in my 20 years of experience, and if I look back historically, little to no evidence other than these short-term unpredictable moves here and there, that gold and silver are consistently weakened by central bank rate hikes or treasury yields. So this does not apply to us. And despite some negative correlation in 2000s, there are far too many instances of gold and silver in which, if you pair against interest rates going higher, where gold and silver went higher with them. Take, for example, 2002 to 2008, when I entered the scene under the leadership, the Federal Reserve in the U.S., under the leadership of Alan Greenspan, interest rates rose in the U.S., culminating with the subprime mortgage debacle alongside the great financial crisis. And I think prime rates, lending rates, were around, I believe, 8.25%. And yet gold and silver increased between 2002 to 2008, gold by some 385%, while silver increased by about 350% in that same amount of time. So gold and silver don't get negatively impacted by higher interest rates. This isn't about what's going to happen. Ultimately, the relationship between gold and silver prices and interest rates is very uncertain and unstable, because gold and silver are traded on a global market. And so they're impacted by global forces, not just what we do here at home with interest rates and what the central bank does to change that. So I believe now investors have probably one of the best opportunities they've had in 20 years to take advantage of an optimum low point entry for both gold and silver ownership. Look at the long term. It adds diversity to your portfolio. It adds stability long term, and it adds a what if factor, right? Which is probably missing from your portfolio right now, because you're uncertain about what stocks are going to do. You're not making money in real estate right now, and we'll talk a bit more about that later in the show. But the best percentage returns to date are yet to come for both gold and silver. And historically speaking, right now, the precedent is set. The game is on. And if you're a gold and silver buyer, all you have to do is buy and sleep at night. That's it. This is not a buying and selling game. We're not day trading gold and silver. We have physical bars and coins. Bought some today, right? Here's an example of one bar. This is the 100-ounce RCM silver bar.
Beast.
6.8 pounds.
Nice.
You cannot pick this up with one finger. It's too heavy.
You work out with it.
Best returns. Damn right you could work out with it, right? Best returns are yet to come, John, and potentially we're going to see huge percentage gaps and jumps in both gold and silver over the next 36 months.
We're going to get into a little later on the show how you can get into exactly open up that portfolio with getting a big chunk of silver like that and more smaller coins, gold as well. In the meantime, 1-877-323-GOLD and the e-store at Delta Harbour. But the details on that are coming up here in just a bit. We got more to get through. You know, as we step into fall in what couple of weeks, how depressing is that? I've already got the gloom on, man. But you know, you talked about here the rest of the year looks like, and gold and silver definitely poised to make a move higher, as you've said. But I read that BMO economists has said a whole lot of what our central bankers do depends on whether or not the housing market finds a price floor. What do you think? I don't think we're there yet.
Well, it's a good point. I mean, there's a lot being said about that right now, because in the very immediate short term, what statistics show is that, okay, an overall gap of around 20 to 25%, depending on where you are, down in price so far, which is huge. Anybody that bought over the last 6, 7, 8 months that put down 20% or less has now lost their entire chunk of equity, which is enormous, right? I have neighbors on my street I've talked to, and they're devastated. I mean, I know one family that moved in just about 3 months ago at the very peak of the market, paid an astronomical amount of money. The house for them, they paid $2.6 million for their house just down the street from me, about 10 houses down, $2.6 million for their house. Their neighbor, almost the same model with a slightly smaller backyard and less done to the house, just bought their house right next to the neighbor and just closed the deal this past, I think, 3 weeks ago, about 3 weeks ago. And they paid, and not 2.6 million, not 2.2 million, not 2.1
Come
million.
on.
Paid 1.9.
Bloody hell.
Same house. So
Bloody
not
hell.
much difference. Yeah, big, huge difference. That's just north of the city, right? But that's happening all over the country right now. But in the immediate short term, most of my colleagues that I trust in the real estate business, a lot of them work for RE/MAX. So I do follow RE/MAX statistics. I get their monthly and quarterly reports, and RE/MAX is now suggesting that sales are going to climb between here and the end of the year. And why not? I mean, when we talk about the mentality of the horny house buyer and what people think about in terms of real estate, they're still on that boat. It hasn't happened deep enough and long enough yet, and the interest rates haven't gone high enough yet for them to think any other way. So I get it. I understand why the common person thinks it's so easy to just go run out and buy a slightly depreciated home thinking they're getting great value. So they think numbers are going to increase by end of year, and that they also have reported in the short term that prices will stabilize. So under these conditions, and we know the painted picture is a lot different than the reality of the scene, you know, the reality of the real day existence. Under these conditions, we know that the Bank of Canada will be forced to continue to raise the cost of money if this happens. If people go back to being horny house buyers and not thinking twice about what they're doing with their money, then we're probably going to get at least 2 more jumps up in the interest rates before end of year. Now, granted, they could be smaller than 75 basis points, but 75 basis points was a shock to me. There were only a few people calling for it. I thought it was going to be likely about 50. It was 75. And realistically, if that happens by end of year, that's going to push the Chartered Bank Prime to 6%. 6% is a kick in the ass if your wages aren't increasing. In that world, fixed rate mortgages would all jump above 5%. Variable rate mortgages taken at like 1.5% a year ago would have an effective cost of 3 times that, right? Which is seriously reducing equity growth. HELOCs would be a complete disaster because those home equity lines of credits are all they become is bloody ATM machines for people, and I dread and advise against them. I'm certainly not your financial planner or advisor, your bank manager, or any of those. I'm an expert in gold and silver, and people know that I've said this a million times, but those HELOCs are deadly brutal to most families. They get into them and can't figure out how to get out of them. And those can cause the foreclosure of a house. They can be the resulting reason why you lose a house. So think very carefully. And then, of course, the central bank is going to rejoice having achieved a historic level of pain because they think they're doing the right thing, which makes you wonder what carnage would happen if a generation ever faced, let's say, 18, 20% carnage. Pause for a second, right? Because wait, our parents were there, right?
That's right.
Parents suffered that in the 1980s, late 70s. High interest rates, mortgages went to 20% plus.
Killer.
Right? Yeah, you
Insane.
had bank accounts, savings accounts that were 12, 13% return. And you know what happened to gold and silver during that period of time? In the years preceding the real onset of real inflation and the real pain of high interest rates and having to deal with that, each metal had the most historic run of its existence in a 10-year period. From 71 to 1980, January of 1980, gold rose some 3,000 plus percent.
Wow.
Silver rose almost 2,500% under those same or similar conditions. So all this is, John, is just history repeating itself. If you're a listener and you're serious about your wealth, then you need to find room in your portfolio for those that can afford to do so to have assets like gold and silver. May they never be cashed in as an insurance policy. I hope they aren't, but they're there. And right now with these optimum buying ranges, John, it's like giving it away, right? Owning a little bit of silver, a little bit of gold, it's like being given away. This is the right moment to do it. And I think looking ahead to the next 36 months, you will be very pleased that you added physical gold and silver.
Well, you just said, never cash it in, never get rid of it. And that's a good time. It's a prudent time, actually, to remind folks listening and those that are already with Delta that you've always maintained a kind of a long-term approach when it comes to gold and silver ownership. I know your pal, what's his face, always says, for the golden years, right? You stash it away, you keep building it, and you just sit on it. You don't trade it back and forth every day. Don't worry about it. Just keep building your equity.
It's right. A lot of analysts will say it. I mean, from the Maloneys to the from him to Kiyosaki, and there's a million guys out there have talked about long-term gold ownership. Yep. My mentor in this business was a man that owned a company that we work with and partner with still to this day. He's no longer in the business. He retired, but his name was Mr. Love, and he actually taught me a lot about this marketplace. And ultimately the same thing was said when he taught us about it, that gold and silver ownership was for the long term. Salente talks about it being for the long term, right? Gerald Salente. David Morgan, another one that talks about it for the long term. We've talked with Nomi Prinz and so many people. Daniel DiMartino Booth, former Fed advisor, former Fed banker. Again, long-term ownership is the key to being successful here. You might not always have as much. You might have a little bit less at times, but when it's optimum, you bulk up your holdings. And when it's not, you hold just the minimum that you need to make sure you have an insurance policy that's there. So it's absolutely true, John. And Delta does believe in long-term gold and silver ownership because we have no idea what tomorrow holds, right? We have no idea what our idiotic institutions are going to do next. Our politicians are so delayed in their mentality for the most part that they're never catching up to what people actually want. They're always one or two generations behind, and that sloshing effect has a huge detriment to our middle class, which is the largest segment of our population, in the sense that we have to rely on that data, which is always getting adjusted or changed or altered or measured. It's the worst thing in the world to have to look at something that gets measured a certain way, like inflation, when we're talking about core versus non-core and all that. And then all of a sudden another politician comes along and says, fuck it, we're going to measure it a different way. Right? Well, you don't get the chance to ask them why they're doing that. They tell you that it's a better measuring stick for what real inflation is. It's bullshit. Come and live in my shoes for a week and pay the bills that I got to pay and walk the walk that I got to walk, is what I would say to any politician or banker who are living the high life off the guaranteed income that they get when they're getting, they get raises left and right. They don't even give a fuck what the economy is doing. They don't care. Right. So ultimately, that is the challenge that we face. We have to be our own central bank. We have to take care of our own wealth. right? Which means some self-direction, and people that come here, they learn very quickly that that is an optimal way to seize the moment, so to speak. So instead of looking at all of these factors and trying to guess where the stock market's going to be, we can see trends, and that's what we're seeking. And that's where guys like, Gerald Celente, like him or hate him, that's where those guys come in. They are trend experts. And instead, we just try to kind of connect the dots at Delta Harbour to understand what's happening. We look for the primary trend, and that's what it's coming down to. But let me tell you, here's what we see so that it's very clear to our listeners. The stock market topped out 2021. The Dow was over 36,000 at that point, and the TSX followed right behind with a high of around, 22,000 points. Done. They're not going back there. Not anytime soon. The bond market topped out in the summer of 2020 with COVID happening and the onset and all that. It's done. We talked about last week a 4-decade-old bull market in the bonds coming to an end. Seize the moment. You don't have any idea how much, as an investor, it frustrates me that people don't realize such a large amount of their money are going into bonds, especially in low interest rate environments. And now, as interest rates start to rise, no, you don't want those. You only want specific types of bonds. But get in touch with your money, because that market topped out as well. And this is not a pause, John, in the bull market for bonds, like we said last week. It marks a new primary trend, one in which gold and silver and other raw assets like land and collectibles and things that have a finite end that we cannot build anymore or find any more of become of value in the long term. Resources, huge value. You're going to buy raw land, connect it with water. You'll be thankful you did. All kinds of those little tips and things, but gold and silver, right? There's no more coming out of the earth. What is actually existing in physical, it's nowhere near what is reported or traded on a day-to-day basis in paper. And those markets will get a jolt sooner or later. And as a physical gold and silver owner, you've got an asset which is diversifying your portfolio. You have an asset which is of value. You have an asset which can be traded around the world in any currency type that you need to, and you have something for a rainy day. God forbid something ever did happen. We have a bank run, anything like that really occur here in Canada. You've got a hard asset in gold or silver that can be held on to and is of value post bank run. So that's very important to remember. And that's what's part of that primary trend. And that's why we do that here at Delta Harbour.
1-877-323-GOLD. Do not forget. In fact, write that number down, call it, have a chat with Darren and the rest of the team anytime. So you got to ask and you got to think, how do folks, how do they maintain their sanity? Things are completely uncertain and they don't know what's coming next. Or do you think people just don't care? If they don't have a clue and they think, it's fine, we're all good. Right?
I'd be lying if I said that the latter didn't hold true, John. I think most people just don't care. They go about their day to day. And if this is you and you're listening, think about it, because I was once one of them as well. I'd go about my day to day. I'd make my investments on a year to year basis, not a month to month, not a week to week. I'd think about it very little. I'd read the reports top level. I just say, hey, listen, what does the first page say? I didn't delve into it. I didn't look at it. They were too complex. This is back before 2002 when I was just a junior investor. I didn't have 20 years of experience under my belt. If I'm thinking about investments, I'm primarily doing one of three things. Either I'm sticking with the primary trend I've always had, which might be a family related trend. Maybe my family has owned real estate, so I'm going to own real estate. Maybe my family has been entrepreneurial, so I'm going to continue the family business. Two, I'm doing the general consensus, which is my government tells me don't be a fuck up, go put money into these RSPs, TFSAs, do all these things. So I go and do that. They have tons of value. You should be using them. They are great vehicles, but you also have to know where you're parked. So that's the second part of it. We don't really ever second guess, right? If you're listening, can you tell me, pick one fund you own in a mutual fund of some sort and tell me 50% or more of the companies that are in it?
Yeah.
I bet you a steak dinner that you can't. That's unfortunate, but it's part of what we're trying to tackle here at Delta to get people educated. Or three, they're listening to a family member or a friend and somebody that's basically giving them advice, and they're always late to the game. Look back at your investing career and determine how many times you bought a stock because Uncle John said, hey, it's time to buy a stock. No offense intended there, John. Uncle Darren said, buy the stock, or Uncle Jimmy said, buy the stock. Yep. You're late to the game. By the time you get in, you're the last to know, right? Last in, first out. And that's the damaging effect that this kind of investing has on us. We're never really doing our due diligence. I can guarantee you one thing, John, of the amount of people that come into our firm, I'm amazed at how long it takes the average person to really get into the market. On average, and people probably don't quite have an appreciation for this. If we look at our data here at Delta, most individuals that are investing more than 50,000 take between 1 to 2 months to make their initial investment. 1 to 2 months from the point of contact to the point that they make a purchase. I'm amazed, and I'm so amazed and happy that people actually take the time to do that. But how often do you do that when it comes to a stock? When it comes to buying real estate? You don't. You delve in, you go buy it, and you hope for the best, right? You say to yourself, look, I'm going to buy this house because I can do little bits and pieces. I can renovate a bathroom. Hey, it's not a problem, right? You don't think about the big picture, what those hours are, how much time you take to put into it. This is the kind of mentality that we've had over the last decade, especially. And I think most people are aware, John, that something big is happening, that we're in the downturn of an economy, that recession is a possible outcome here, and that we may already be in some respects in a recession for a lot of people. But very few people realize how dysfunctional the economy has become, how much we rely on printed money, for example, how much the economy relies on the average individual going out and gassing their credit card, on the average individual sending their kid to school and taking a HELOC to pay for it, right? That's how the economy relies on you, the individual, right now. Because if you just went to your cash reserves and your savings like our parents did and said, hey, I'm only going to pay for the things I can afford out of my bank account, boom, we crash tomorrow. That's it. Our economy's over. We're dead in the water, right? Why is it that houses can inflate so much? Because we allow so much credit to freely move through the system. If we only crunch that down to what a person could afford and said, hey, we shouldn't be buying homes that are more than, let's say, 5, 6 multiples of our income like our parents did, we'd be up Schitt's Creek. You'd be living in a shack down by the river. You know, you'd be living in a shithole because it's the way it is, right? I mean, we don't think about that. So while it's impossible for rational people to get enjoyment for an event like the obliteration in part of our economy in Canada and US, or for matter the world economy, it is possible for dedicated gold and silver owners to retain most of their stability in their portfolio and to get richer by far. As that obliteration occurs, we know what the bankers are thinking. As many of the Fed heads in the US and here in Canada, they have suggested that US rates, which is the world's largest economy, need to rise to 4% to curb inflation. Other analysts, Nouriel Roubini, among the notable ones, they suggest 5% is required. I'm going to go out and on a limb. I've been resolute that regardless of what is theoretically required, rates are most likely going to go and push towards 10%. I think that's where we're heading, right? I think we're going to experience what our parents experienced, especially in the world's largest economy in the US. It won't happen in a year or two. It's not something that's on the immediate horizon. It's going to slowly take time to develop. It will take far longer than I think most people believe, but over the next, let's say, 15 to 20 years, that's the outlook I have for the marketplace. The biggest concern for me right now is watching what happens in the cycle as it relates to worldly geopolitical hotspots. You know, we used to talk about the clock and where we are on the clock. 12 noon is the high point when everything's great, making money, stock markets are good, traditional investments great, real estate's great. We've just passed the 12 o'clock mark in real estate. We just passed the 12 o'clock mark in stock markets. We've just passed the 12 o'clock mark in bond markets. Those are our traditional markets. Now we got to have cash, right? So we are getting less emphasis on these hotspots, and that concerns me because there's a war going on, and there is proxy wars happening out there, a ton of it. I mean, ask yourself, when is the last time you turned on the evening news and heard something about Ukraine and Russia? Thousands of people getting killed, misplaced, having to migrate to other countries, incoming to Canada. Thank God we can do that for people. But notice how it's no longer in the nightly news. Politicians love that when it's not in the hotspot. That allows them to do and to continue their quiet wars, which make money for them, right? The U.S. is the biggest proxy warlord of them all. They'd rather have somebody else fight the war, but they just become part of it, right? Indirectly, you know, but if you look at U.S. politicians, they're trying to keep their debt-funded Ukraine war going and intensify their proxy wars with Russia and China. And U.S. Politicians, they understand that they need to contain interest rates. So this interest rate binge that's going higher to control inflation domestically, it has to slow at some point. Doesn't mean it has to stop going higher, it just has to slow down. Otherwise, the government collapses. You can't continue 75 basis points every month for much longer because it'll have a revolution. People will be on the streets kicking and screaming. We're already displacing thousands of Canadians per month because of the highest interest rates that we've experienced in our life, right? Since our parents were young investors. And people can only take so much grief when it comes to that. When their bills and cost of living start to rise so much. I mean, think of the poor folks in the UK. People are reporting saying that their energy costs in some cases have gone from hundreds of pounds per year, right? Let's say in the average home, it cost, let's say I was reading a report that was somewhere around 600 or 700 pounds a year to over 2,000 pounds a year. And that's just happened in the last 8-9 months.
Yeah.
So next year it's going to cost them 2,500 pounds to heat their home. Last year it cost them 600-700 pounds. Where the hell do they come up with that extra money? In Canada, the largest portion of Canadians living below poverty is now. We don't report about it. Nobody talks about it, right? We have a huge amount of Canadians living below poverty right now. Interest rates don't help that, John. Cost of living is going out of control, and we're not getting upticks for our retirees, for our veterans, for our people who can't afford to help themselves. They're not going to get big upticks that match inflation to the cost of living. So once the war cycle ends, which takes a long time, and just look at history, it happens on a regular basis, rates are likely to break upside from there. So they have to contain it for the most part, even though they're fighting inflation. But it'll just slowly start to trickle up as it did in the 1980s. And US and Canada will essentially be left alone fighting for themselves because all the other parts of the world realize this is chaotic. This is ridiculous, right? We're living in the paper world still here in the West, which is unfortunate, but it's true. And a lot of people, a lot of countries are going to turn to alternate options. China, Russia, India, other BRIC nations, and they're going to use them to get the resources that they need. They're going to use them to create alternate currency realities. They're going to use them to circumvent having to deal with the West and the high amount of problems that we have, financially speaking, in our economies. Eventually, that's going to happen. So, of course, domestically, what's going to occur? Weakness. I mean, we are in the threat of having one of the worst recessions we've ever experienced, right? And what we had over the last 10 years in low rates, quantitative easing, tons of money printing, easy credit allowed the markets to rise for years. But now the exact opposite is happening. So we've got high rates, we've got quantitative tightening and war. And it's going to happen for a similar amount of time, the next 10 years, maybe plus more. And as our listeners know, I've suggested that the stock market in the US and Canada would enter a collapse phase of some sort, the likes of which we've not witnessed maybe since the Great Depression. I don't know. And from there, it would begin stagflation. There's already calls for it. It's going to happen. I'm calling it out, and I continue to say it and be a huge proponent of being prepared for that. And part of that problem, like we witnessed in the 1970s, is being prepared. So as investors know, you got to stay on top of the wealth. You got to hold cash because you know it's prudent to do so because you never know. And you have to diversify, right? You have to get something else other than those traditional stocks, bonds, and cash in your portfolio in order to make the most of it. Because the primary theme of this economy and world economy going forward is not stock boom. It's not tech boom. It's not growth of cryptos or alternate currencies. It's surprise. It's that we don't know what the hell's coming next, right? That's the largest single theme of this world economy coming next. It's surprise. You never know what's coming. You got to be prepared for that next level. And gold and silver, John, ultimately help you to do that. They're not all that you need, but they are an important part in every single person. Big, small, short, or tall, fat stacks, no money at all. As long as you can afford it, you should be owning gold and silver in your portfolio and having some of it in your wealth.
Just seems to your point during the last decade, except for COVID, well, maybe even then with Shopify went absolutely crazy over the last couple of years, that they're spending more and more, people just dishing accumulating things, just tchotchkes around the house, whatever. They just want to get stuff, and it sounds like it's all coming apart at the seams. Maybe people have acted so rashly over the last decade. That's the reason why. I mean, spending habits and the money flow never ends. That's what people feel, right? But it's gonna bite them in the ass hard, isn't it?
Well, think about it from a personal level, John. When's the last time you, me, anyone else dropped that credit card down and effectively spent more than 10 seconds thinking about what that means? How much money did I just add? What did I actually do? How much do I owe? Do I pay my bills monthly? Does the average Canadian pay their credit bills monthly? Great question. It's a simple
never
question.
carry a balance. I never carry a balance.
John,
Never.
that's why you're here, because you're like me. And the people who
Yeah.
come through this door will say the same thing. We all think with the same mentality, right? If I have to borrow something, it's money that's making me money. I have that same mentality as Kiyosaki, which is that other people's money should be used to make me money, not not vice versa. I shouldn't fall victim to needing to borrow in order to survive. Right? People who have to borrow in order to survive shouldn't be owning or thinking about stocks and bonds and in portfolios. They should be focused on getting rid of their debt. The biggest thing you can do for yourself is to get rid of that mortgage. That's the biggest and most effective thing you can do. That's your biggest single largest investment you're going to make. But for some people who can't, we've talked about that alternative reality, John. Speculators acted the last 10 years as though money had no value. If you think about it, just think about it logically, right? We watched so many things get bid up. It wasn't like there were single stories. If you look at the mining space, for example, I can look back at the 20 years prior to 2010 and say there were individually a handful of stories like Bre-X or other investing problems that we saw that made the mainstream, right? The last 10 years, there's hundreds of stories that have cropped up all over the place, right? Is that reality to know that you might have a neighbor who bought Bitcoin at, I don't know, $200 and now has $300 million in the bank? It's not reality, but it makes for a great storyline. And we hear these stories. And of course, what is the first thing we think? Well, if they can do it, so can we. And so instead of thinking about it logically, that you got as much chance of being a billionaire owning Bitcoin as you do winning the lottery, and then think about it logically to be ahead of the times and investing in assets like gold and silver where nobody's thinking about them, we just jump onto the bandwagon. That's what we did. So we bid up hundreds, maybe even thousands of useless stocks, the GameStop stories, one after the other, all of these things, when real true value stocks lost value, when people that were actually manufacturing something tangible lost value. You look across the board now, there's probably only a handful of mining companies that I would buy to complement the ownership of my physical gold and silver. Those companies all have cash reserves. They're creating and pulling product out of the ground right now as we speak. And if you look at silver companies, they're doing so below the cost of production. So paper value is below the cost of production for most of those companies. Again, we'll go off on wild tangents if we talk about that. But if you look about it, we built up thousands of useless cryptos that have nothing more than speculative value, to preposterous levels without any roadmap or historic precedents to refer to. Nothing. We had nothing to refer to prior to this. And yet people took real hard-earned 9-to-5 blood, sweat, and tears money and put it hand over fist into these casinos trying to make as much wealth as possible. And that's the mentality that we have. We risk copious amounts of money on these bizarre investments like NFTs and things as if it was though money was no objective, right? It was no object at all. Businesses borrowed tons of money back to buy back their overpriced stock because they were encouraged to do so, to paint a picture of rosiness in the belief that all was well. Like, if a company buys their stock, well, I should buy that stock, right? Look, XYZ Acme's buying back their stock in droves. That must mean they believe it's going higher. Who knows? A lot of companies bought back their stock because they were doing poorly, because they needed to paint a picture, because they needed a story, because it was legal to do so, right? But we've talked about the importance of the data that's out there. You can publicly go find out who's dumping their stock. And what you'll see, as just as frequently as it is for a company to buy back their stock, many of the insiders at those companies are selling stock, right? And a lot of times they're selling stock and not telling anyone. They have to report it so you can go find the data, but they're not making headlines with it, right? So businesses borrowed a ton of money to buy back what were already overpriced stocks to do so, all in the belief that the financial markets would stabilize. They got their wish, 10 years of it, right? 10 plus years of it. Here we are, 2022. What did it do? What effect did it have? Well, I'll tell you what fucking effect it had. The US, every man, woman, and child owes 92 grand. I say, okay, well, that's not a big deal. That's the US. That's not Canada. Okay. Every man, woman, and child in Canada owns 32 grand.
Nice.
32 fucking $1,000 in debt, right? When does our country pay that back?
Never.
Never. That's right, John. Exactly. Our parents didn't think like that. Our countrymen didn't think like that. The politicians that came long before the shitty ones we have now didn't think like that. They thought we'd never, ever sink our country into too much debt because debt was the one thing that killed countries. Debt was the one thing that killed currencies time and time again for thousands of years through history. Every single goddamn currency goes to zero, right? Ask the Romans if they ever thought they'd lose power. Impossible to conceive at one point in time. How could somebody that basically controlled 3/4 of the earth at one point in time lose power? I'll tell you how. Printed fucking money, debt. They overcooked their currency, and it was the single downfall of that great power. And throughout history, it happened time and time again. When you print too much money, when you owe too much to the rest of the world, eventually they're going to come calling and they'll close the doors and you're fucked. And by then, somebody else owns everything that you used to own. You used to own your rivers and lake. You used to own your fresh water. You used to own your oil reserves. But then idiots come along and tell you that it's not clean, it's not safe. Well, I don't live in a world of what ifs. And it may be better for some people to think long term about the preservation of our beautiful land and the preservation of our beautiful world. I get it. But ultimately, everything I've heard focuses on having to live and survive in the here and now. And so when we're talking about those things, resources have to play a role. We have to be careful with our resources. We have to manage them accordingly, but we also have to share them with the rest of the world because before you know it, somebody else owns that resource. We don't own it as people anymore.
Yeah.
Canada isn't Canada anymore. It's a combination of ownership of other countries. And that's what's happening in the US right now, happening in Canada too. And so to stop all of this, debt and all of this problem every man and woman child has, we have to turn on a dime and start at some point being responsible. I don't want to be part of that. And I don't want to be at the bottom end of that. I don't want to have accumulated so much debt at the point where the public says it's no longer good to have debt, that I can't get out of my debt. Because what happens? They take my home, they take my income. I lose my job. I become homeless. I don't have the income to pay for the kids' schooling. I don't have the income to pay for that new car. I don't have income to pay for that trip. I don't have income to be that middle-class person that I want to be. So what do I have to do? I have to diversify. I have to think outside of the box. You have to own other assets like gold and silver, raw land, development land. You have to do smart things with your money. But to stop inflation right now, the feds are going to jack the rates. So you have to be prepared. Like we said, keep cash, think logically, own hard assets. They got 90 trillion worth of debt in the US right now, both public and private. And I don't know what they're going to do to solve that problem. Who knows, right? I mean, they're only as good as what people have the faith in them to control. Yeah. And if the rest of the world loses faith in the US, as a country, Canada stands no chance of survival. We just don't. It's that simple. We can't stand alone. We don't have the power, the amount of control that we used to have of our own economies. Politicians are, they're not strong enough. They don't have the strong enough institutions to really manage to be a completely independent country. We're going to survive only because our neighbor to the south of us is the largest power and the largest economy in the world. When they don't have that anymore, nor will we. So you've got to own gold and silver. Does that come tomorrow? No. It's just a slow reduction over time. And in the immediate short term, why not get rich? Why not have assets that are going to perform well? That's why you own gold and silver, among other things.
A couple minutes to go here, pal, before we wrap it up. So give us a quick rundown of how we do that. What's the options for getting some of that portfolio happening?
Simple, John. Go to the website, start there, call the number that you give out so graciously throughout the show every week. In listening to our podcasts or viewing this video on YouTube, you've got the option for our e-store. That's simple. You want to buy $100 worth of silver, go for it. Go to the e-store, make the purchase, make your payment, and we'll send it right to your door. You want to make a larger purchase, you need some discussion, you want to talk about storage, you want to meet face to face, you want to have a phone call, you can book a consultation or give us a shout directly, and then add storage as a secondary option. Storage means you have insurance, you have liquidity to be able to buy and sell by phone. You have it in your own name, you have your bar numbers, you have it segregated from the rest of holdings. It's a great way to really participate on a higher level, kind of like your own central bank. You have your own vault, so on and so forth. Very cool, very easy way to do it. The third option, registered accounts, right? TFSAs, RSPs. We're doing something big that we're going to announce over the next short while in a partnership with a new colleague, and it's going to be fun. And we're going to be talking about RSPs and TFSAs a lot as the end of year approaches and the first quarter of next year ensues, and why we love gold and silver inside RSPs and TFSAs. So whether you're starting brand new ones, or whether you have a pension somewhere else or an RSP or TFSA with another institution, bring them over to Delta. This is the way to go if you want to own physical gold and silver bars and coins like we showed earlier. We'll show it again. We love putting these big buggers into people's TFSAs and RSPs. The thickness of that bar, that's 6.8 pounds. It's a beast.
Damn,
right?
It's a beast.
Oh, you can
Love
hear
it.
that sound. It makes a big, large sound. So registered accounts is an awesome option. If you've never had a TFSA before, you qualify for as much as up to $81,500, completely protected against capital gains. Buy all the gold and silver you want. In fact, up to $81,500 worth of gold and silver. That holdings could go to sky's the limit. They could double in value. You want to take some or all of it out, make some buy and sells. You can do that. No capital gains whatsoever. And if you make money and take the money out, take it home and use it for whatever you need. Put the kids through school, buy the extra car, make sure that those cottages, those recreational properties got less mortgage or no mortgage, buy a nice vacation for your family, do all those extra things you want to do, or hell, just put it back into another RSP that you feel
now
confident about. We're talking about all those options. And then lastly, the Delta Vault account with bulk bullion. Bulk bullion is just a way for the average person to say, I'm not worried about owning this bar with this serial number, this specific premium on this bar. I just want exposure to what I know is physical gold and silver. I don't care whether it's 100-ounce bars any more than 10-ounce bars or 1-ounce coins or anything like that. I don't want to pay any additional fees for the premiums on that bar, the smaller or the larger or the tiny coins or anything like that. So what we've done is we've taken the lowest possible premiums we can in both silver and gold, which for silver, it's the 1,000-ounce bar. And we put tons of those bars, 100-ounce bars, 10-ounce bars, coins, everything into storage, into the vault. We might have on any given day a few 100,000 ounces sitting around, and any client can come in and buy one-to-one, but not pay those high premiums. It's a very small premium on silver of around 30 cents, and on gold, I think it's around $13, plus your commission for doing business with Delta, and you've saved yourself a ton of money, but you still get physical gold and silver, gold and silver, which is audited on a regular basis, gold and silver, which can be converted to any bar type you want down the road, which can be taken home at any time you want. And in the bulk bullion counts, the best option of all, when the going gets good and silver and gold start to rally, we're right in that optimal moment now. You can use your silver and gold as collateral. You can either borrow against it, much easier way to take other people's money and use it wisely to either borrow more product or to buy more product or to take it home, right? Take some money home off the table. Maybe the price of silver and gold go up and you want to bring back the principal. You laid out 50,000. You want to take that 50,000 off the table, put it back in your pocket and never worry about it, and have an account which is totally making you money using somebody else's money. That option's there. We'd love to show you how to do that with the Delta Vault account using bulk bullion, and our partnership with Precious Metals International will allow you as a client to do that. So many great ways, John, all of them equally impressive. And it all starts with that person listening here to this podcast or viewing this on our YouTube channel and knowing that the reason we exist is because of you. The reason that we are successful is because you are successful. The reason we exist is because you exist. And I want to let people know we're growing again. We just did a huge run on looking for new candidates, and we believe we found 2 new candidates. We're excited to make that announcement shortly. We'll tell you more about it. But Delta is growing once again, and we're really, really excited about the partnerships that are up and coming. We've got lots happening. So we'd love for our listeners to be part of that. And we're here because of them. So we want to thank them for their business and their time. And thank you for hosting a show and letting people know what we do and living under our roof for an hour or two. We're grateful that you could come by and listen. And we look forward to seeing you next week. So thanks very much.
Guys, awesome stuff. And again, that phone number one more time to reach out, at least have a chat with Darren or Rob. Just get educated, start that part of your portfolio. It is time you did so indeed. 1-877-323-GOLD. That is the number. Delta Harbor with you online and all your media sources as well, whether it be Instagram, Facebook, Twitter, YouTube as well. Delta Harbor with you is how you want to search for that and get started on this investment. And we'll catch you next week right here on the next Hard Money Podcast.